Hello value investors, thank you for joining me. In today's video we're going to talk about the best companies. Notice I'm not talking about necessarily the best investment, and many businesses may be terrific, which we're going to discuss throughout the video, but they don't necessarily make for a great investment. There's a small difference, which is the valuation. So before we get started, if you're new to the channel, please subscribe now so you can get my next video installment. Let's get started. So if you look back, for example, at let's say Microsoft, with the benefit of hindsight, Microsoft has been an amazing business. Unquestionably high margins, strong free cash flow generation. I've got a video on free cash flow to help you around. However, was it a great investment? So for example, if I look at the whole decade from 2000 to 2010, was that a great investment to have been made? So I'm really driving at here is the idea of finding the great investments. By positioning yourself amongst the best businesses, you're predisposed to do quite well over time. Now, here's the caveat. Markets tend to become quite faddish, so at the moment, anything that is kind of positioned itself as a SaaS business or low-touch economy or anything that is basically allowing you to seamlessly transact, whether it be through payments or e-commerce, these businesses are being traded at very high multiples. Some of them, few of them, will, over the next 5 years, continue to grow and make today's valuation justify the rest of the class. Others, the majority, you will see them from today, they're at the peak right now, and they'll just keep trailing along or they'll just decline. So many investors are looking at how the bull market has done, and they're saying to themselves, okay, these businesses went through the global recession of 2020, they went through the V-shaped drop in the economy and back up, and they've bounced back up and they just keep on going. But the underlying performance is not doing so strongly. You know some of those names off by heart. I don't have any position in any of these stocks, and this is just for educational purposes. But for example, you got your Shopify, you got businesses that are like, for example, Workday, you got businesses that are trading like Zoom, that are just in a stratosphere. New shareholders to those businesses are going to struggle to see an upside. Now, momentum may carry that share price forward, but that is just speculation. Hoping to buy high to sell higher is speculation, that someone else will be more foolish. Now, a better way to do it is to align yourself within reason with the earnings power of the company. So, let's go back to Microsoft. Microsoft is a great investment, in my opinion, because it is not particularly expensively valued. I have no position in Microsoft, but I'm just discussing that it is a business that today has a lot of potential and is not irrationally priced. So you have that high margin business that translates into high free cash flow, and you're not paying a large multiple for it. If you remember that this business pretty much touches everyone at some point in the working day. Most businesses, most large enterprise will pay unquestionably for a business like Microsoft. So that is like having a large moat, right? It has a very large competitive advantage. Many other businesses are trying to position themselves along that same narrative of being critical to increase your productivity, increasing your working environment, to make your planning stronger, your resource allocation stronger. But it's not true. Like, you see that their revenues are kind of already fizzling out. So some of them they reported now their Q1 results for 2020, and they only got affected by COVID in the latter parts of March. So we haven't really seen how that fulfills going into Q2, but you can see that there is this discrepancy already. Some businesses are strong. I don't have any position in Amazon, but Amazon is going to just kind of bulldoze all those retailers away, because every time that those retailers have had to have a step back because they're having to play defensive, because the consumer is not able to reach them as successfully. Obviously, doors closed, never good for a business. So those businesses have had to play defensively, and Microsoft is just able to kind of have that attitude of being aggressive. So same with other businesses like Facebook or Facebook. When Mark Zuckerberg came out, he said straight away, we have been planning for this, and right now I believe more so than ever that having very large cash holding on our balance sheet is playing to our benefit. Because you remember there have been calls that some of these businesses like Alphabet, like Facebook, have too much cash and they're playing too defensively. Well, the joke is now on those people that were claiming that, because now when the global contraction came along, these strong businesses are able to just go ahead. So let's remember, you are able to recognize quite quickly what is a great business. I've discussed several of these in the video. But what makes for a great investment? A great investment is a very different story. So yes, those businesses like Amazon are terrific, and they most likely are great investments. But everyone else is already bidding up the share price, and it's kind of like, yeah, it can continue to do well, and there is a lot of positive sentiment towards these cult stocks, but I'm questioning whether there's not a better way to go about it. So I believe, this is what I've done, doesn't necessarily mean it's right, that just coming to low cap stocks, you can do quite well. For example, you look at the Russell 2000, and you can see that within the Russell 2000, many of these businesses haven't really recovered going into the COVID crisis. So you have this huge inflation of the top 5 names: Apple, Amazon, Alphabet, Amazon, and Facebook, that weigh 20% of the S&P, and they're carrying the S&P forward, whereas the rest of the economy, even within the S&P, are not doing so greatly. So I believe that coming away from those household names can be quite a rewarding investment. Now, what I want to say is that this is a strategy that I think was worthwhile, is being fundamentally aligned with the business's earning powers. There are many of these small cap businesses that have strong potential, and I talk about them in my marketplace, and I think that just digging around for something that is maybe a little bit off the beaten track can make for quite a rewarding investment. Because to answer the question of what is a great investment, you first have to think about Buffett's rule number 1, do not lose capital. That is the most important aspect of the whole investment. When you're making an investment, the idea that if something goes wrong, you don't lose much capital, that is very, very powerful. Because when it does work out, that really takes the whole of the portfolio away. So be very mindful not to go to the investment idea of the day. Don't go into these kind of household names that are being claimed that they're the new era. Don't go for those. Go for those smaller businesses that generate a lot of free cash flow, have strong balance sheets, you're not paying a large multiple, particularly right now, and be diversified. I'm talking about in other videos that having approximately 10% of your wealth distributed into 10 companies, what I call the 10 by 10, I think that can be quite worthwhile. This is something that Manish Pabra used to do quite a lot. He's not doing that so much nowadays, but I believe that having a 10 by 10 portfolio, so 10 stocks, 10% each, I think that is something that's quite worthwhile. So as always, hope you found this video useful. I'll see you soon.